what Belong is? What is the problem that you guys are trying to solve?
Belong is trying to make it easier for NRIs, non-resident Indians, to invest in India.
I have to open a brokerage account in India. I have to have a Indian mobile number active. I used to wake up my dad when I have to make a trade because it sends an OTP.
The problems that we spoke about, right? So one is with the KYC or onboarding. Then there is the actual operating of the account and transferring money and all of that. And the third, taxation, right?
Again, taxation is a big problem. Again, there is double taxation both sides. You have to file taxes again. So when you try to start investing in India and want to be part of the growth story, because you have been hearing so many stories.
The remittances that we get from NRIs, they are very big part of it. Very big source of forex. At an annual level, this is about 125 billion. More than half of it goes towards the expenses of the family. But yeah, good like 10-15% of it gets invested.
A lot of people who actually initially plan to move to India do a lot of investments, but typically then stay back in the US. It's very hard to get money back.
It's not because no one can build a digital product for this. It's because how the regulations are in India, how the Indian regulators have laid down those guidelines, right?
How are you guys trying to expand? What countries are you guys focusing on? Can you talk more about that as well?
Initially, we are targeting the UAE region to begin with. There are broadly three big markets, like where you have a lot of Indian expats: UAE, BK, and the US.
One interesting thing for any entrepreneur, right? Like identifying what is the right time to exit as well.
I think it's one of the hardest questions to answer. Just after Goalwise, I was feeling pretty burnt out, and just after Goalwise, like, boss, I'm never going to do a startup.
What was the criteria for seed funding? Was it the market?
So we were at Belong, we were trying to raise like a seed round of 3 to 5 million. Now, so if you're trying to do that, the first thing you need to lock in is a lead investor who can lead the round. Right?
If you could probably share a couple of things that you learned being part of a VC.
As a VC, I learned to differentiate between what's a product versus what's a business. What's a product versus what's a company.
Hey Ankur, thank you so much for joining our podcast today. We are very excited because I think this is the first time we are having a fintech founder on our podcast. We have a bunch of questions that we have lined up for you. So again, thank you so much for taking time. I'm very super excited. Welcome.
Thanks, guys. Thanks, Fanny. Thanks, Sidhu. And really excited to be on this podcast.
Awesome. So we'll start with a very basic one, right? If you don't mind, can you talk us about your journey? You have been a serial entrepreneur, both on the fintech, both the companies on the fintech side. So can you talk to us about your journey? What sparked your interest in fintech and entrepreneurship in general?
Sure. So I got into financial services before I got into fintech. So I graduated as a software engineer from IIT Kanpur back in 2008, and pretty soon I realized I didn't want to do just software. So I got into investment management as a portfolio manager at an Indian smallish hedge fund. Did that for a couple of years, started liking that. Then worked at a bigger hedge fund which was more global. So this managed about almost $10 billion in assets, and I was doing, because of my background in tech, I was mostly doing what people generally refer to as algo trading. So we used to write a software that would then place the trades and consume a lot of data, including news, weather data, etc., and then generate trades that we would think would be profitable. So that's how I got into financial services or investment management. And then after a few years, I was enjoying it, but I also wanted to sort of build something of my own. I think that's probably how most people get into entrepreneurship. But I think I was following the US markets, and I saw a couple of interesting fintech products come out during that time. So this is about 2014-15. So we had wealth management platforms coming out then in UK, etc. So that was something that I felt that this looks up my alley, and it'll be fun to build something for the wider Indian audience rather than just trading for a hedge fund. And that's how I started this. Got together with a couple of my friends, so got lucky to have like really good co-founders. So one was a senior from my college, Swapnil, and then there was Savitri, who I had met at work. And yeah, the three of us started this very quickly. We were joined by another childhood friend of mine who was very good at tech. He was at Oracle then. So yeah, the four of us started Goalwise. So that was the name. It was a mutual fund investment platform for India. So it was like an app. You can download it and get your KYC done and connect a bank account, start investing. It was modeled as a robo-advisor. So basically, you could enter your the goals that you wanted to invest for. So it could be retirement or buying a house or saving for your child's education, and it would like make up a plan for you, right, based on your risk profile and all of that. That okay, this is how much you should be investing in equity, debt. This is the amount you should be investing, and these are the funds that we suggest. So we were like really solving for that financial planning or advice part through an app.
Makes sense. I want to go understand more about Goalwise as well, right? I personally use a lot of like fintech apps too. In general, the first thing that I could think about is like Robinhood or things like that, which will enable you to like understand all the stocks. They won't actually recommend what you want to do, but it's more like how is the market doing or what do we think is a buy versus sell, etc. So, and I know like these apps have been like existing for quite some time. And again, this is also your first baby, I would say. So, how did you end up deciding on Goalwise? Like I know you're talking about like mutual funds, etc., etc. So, why did you decide on just that, and how did you identify that opportunity is the best one?
Yeah. So just to again give a little bit of context, and since you mentioned Robinhood and you guys are in the US, so I think a better comparison is with like a Wealthfront or a Betterment, which would help you invest in ETFs, build a diversified portfolio in a very simple way. So that was kind of the inspiration that we had. So we were looking to help people to invest in fund stocks in general. Like you can think of investors or even regular folks as either they are like DIY investors, like do it yourself. So they will do the research or maybe pick up stocks or maybe find funds to invest in. So in India, I mean, mutual funds are more popular than ETFs. So you can think like in US, so you can think of them as equivalent to like an ETF concept in India from a public perception or from a popularity perspective. So yeah, I mean, our idea was that, okay, there are more people who need help in order to decide where to invest as compared to DIY investors. And we wanted to sort of solve for that. We had a lot of friends, family members, and including like us, like we didn't have so much time to just keep doing investment research. And it would have been good to have a tool which could, just based on some basic information collected from us, like tell us that, okay, this is a good investment plan for you to follow. So in a sense, we were building for ourselves. And people like us. And yeah, if you divide the market into like DIY versus assisted investments or advice based investments, so we were trying to go after that layer.
Yes, and now Robinhood also introduced something like this. It's called Robinhood Strategies. So I started playing with it. So actually, you give your risk profile when you're withdrawing your net worth and all, then it actually picks a set of stocks and investments for yourself. So one quick question, Ankur. So I tried Wealthfront before. So I think one of the problems which I've seen with these are they have a lot of fees built into it, right? So initially the first 5,000 was free. You think that your money is growing and all, but once you start adding more and more money to it, the fees accumulate fast. And I was like, okay, I'll do a math and compare it with directly investing into an S&P 500. It was actually better off me directly investing into better off than a robo investor. So how does your fee structure and all work like?
Yeah, so I know that's a very good point, and it was like one of the realizations also that we had during our journey. So initially, we being our first startup, like I think we made like a lot of those classic mistakes. So we just started by building out for ourselves, which is not a bad starting point in general, but yeah, I think we sort of over-indexed on that. And while again, we built a product that solved the problem, there are a couple of things that we missed that in hindsight we realized. But to just give you an idea, we worked on this for about 4 or 5 years, and we got to an AUM of about $100 million, which is decent, like from a retail customer perspective, like that kind of assets under advice. Yeah, assets under advisory is what we call it at that time, since we were advisors. I mean, it's a decent sum, especially from a bunch of Indian retail investors. But yeah, a couple of things that we realized is just product market fit. Literally, that aspect is not enough. Like, it's not enough for you to just build a product that solves a problem. You also need to have what is like a channel market fit, right? How do you reach your ideal TG? So again, I told you about the division between DIY versus, someone who does not know where to invest and needs to be told or advised, needs some financial planning. So typically the people who will come to you on your own are the people who are good at doing research online, that okay, what exists, what does not exist, right? So by yourself you will end up attracting a lot of people who are, if not completely DIY, sort of DIY investors, right? Like, who don't mind being DIY investors, right? So they are also the people who will mind paying these type of fees, and like the same thought process. For us, the best TG is not looking for the solution online, right? Because they are anyway like overwhelmed with all the financial information available online. Like, I mean, they don't understand now how exactly a stock market works or how exactly ETFs or funds work, right? So you will have to acquire them via a human touch, right? They're already like sort of feeling lost in this entire thing. So yeah, that was the whole channel market fit, or whatever, channel product fit, what however you might want to term it. So yeah, that was one of our learnings, that the best fit audience for this product is someone who is not good at a DIY type of research themselves. And you will have to find, like, you cannot acquire these guys like purely online, right? Because online people are mostly DIY people, right? So you have
So
to
these are
find
people like,
ways
okay,
of acquiring.
so essentially want people like, okay, I'll invest X amount on a regular basis and I maybe need a return of so and so percent every year or quarterly or whatever it is, right? So
Like,
these
you
kind
can
of
sit
people.
with them. Yeah, so you can sit with them, figure out what they're investing for, what are their goals. So again, the same thing, right? But it needs a human touch to onboard them, because they are not going to filter through all this information online and find you and say, oh yeah, Goalwise, this is making sense and let me use this, right? So yeah, that was like one of our like biggest learnings through this.
Awesome. I don't want to spend a lot of time on Goalwise because I'm sure like you've moved from like your first baby to second baby. But one interesting thing for any entrepreneur, right? Like identifying what is the right time to like exit as well. Like it could be like different ways of exiting, like going to market or selling the company, etc. How did you guys identify your right time to like exit the company, and why did you guys go with Neo? Like, what are your thoughts there?
Yeah. So I mean, I think I mean, there's that, whether you sort of persist or you pivot or you quit. I think it's one of the hardest questions to answer. I still, I mean, I know my answer with Goalwise. I still don't know how this will pan out in future. So I'll just tell you how we thought about it in Goalwise. So just to give you what was happening back then. So this is around 2019. So we have been at it for about 4 years. Middling numbers, I would not say like great, but also not like too bad. So we're trying to raise our Series A round, and I mean, the numbers that we had in mind for our fundraise, and also like we had a thing that okay, we want at least one tier one investor to lead this round. And yeah, I think we would have gone through like at least 100 pitches. And I mean, that's the target also that we had set for ourselves, that okay, we have to make at least 100 pitches, and we did get some term sheets, but they were not like, in terms of the check size or the quality of investors that we wanted, it was not what we were going for. So that obviously was a huge market signal for us. And also, like, just internally, doing this for almost 4 or 5 years, we also had a feeling that we are sort of like pushing against a wall. I mean, this robo-advisory market is probably not that big enough. So that was the internal thought process. And then on top of that, like, as I told you, we were looking for raising from, some tier one investors to lead the series around. So while that was not happening, they were not ready to lead the round, but a lot of them came back to us and said that, okay, but we have this other, like, almost Series B, Series C fintech company which might want to acquire you guys, right? So we had a lot of like M&A interest coming in. So I think all of these things put together, we thought that okay, maybe it's time to sort of make this go with the M&A process, and maybe then it gets a better platform for this product to sort of reach more people. So that's how we went about it. So a combination of things, but yeah, again, like a very hard question to answer when you are like in the thick of it.
That's true. It's never a straightforward answer, right? You'll have to look at like multiple things, and what is right for you might not be right for the other person. So you just take the call. You just go with your gut probably at that point of time. Cool. Let's jump into belong here. I know that's the core thing that's happening right now. So for the audience, can you explain like what belong is? What is the problem that you guys are trying to solve now?
Yeah. So put very simply, like Belong is trying to make it easier for NRIs, non-resident Indians. So these are basically Indian expats spread throughout the world. So we're trying to make it easier for them to invest in India. So that's like a very like a one-liner pitch. Now, just to unpack this a bit, so there are about 32 million, NRIs and OCIs, like people of Indian origin across the world. They do, I mean, the India growth story is now very evident. A lot of people, believe that, okay, the next decade or two are, going to be where India is really going to shine. So they do want to participate in the India growth story. Anyway, a lot of NRIs, send money back to their families back in India. So I think India is the world's largest recipient of inward remittances. At an annual level, this is about $125 billion. More than half of it goes towards the expenses of the family. But yeah, good like 10-15% of it gets invested either in the equities market or real estate in India or deposits, etc. So yeah, so that's the high level. Now there are a lot of ways in which this journey is broken for an NRI. So right from KYC, which is like customer onboarding, that is not very digital. So if you want to invest in, let's say, an Indian stock market or Indian ETF or fund, the onboarding is not digital. If you're outside India, you need to take print out documents, get them notarized, courier them back to your bank in India, etc., etc. Then, so that's the first part where it's broken. The second part is just the transfer of money. So while sending money to India has now become much easier, but again, once it reaches India, then there are different types of bank accounts that NRIs have to maintain. So there's an NRE account, NRO account. You have to move money around to finally invest, and then taking out money is again a very big hassle. So banks might ask you to again fill out some forms, sign them, scan and courier and all of that. So again, not a very user friendly process. And then the third part is dealing with tax compliances in India, right? So you're living in one country, you're a resident of that country, could be US, could be UK, UAE, and then you have your financial affairs also in India. So there is double taxation, or just just knowing what are the different tax compliances that you should be doing on a regular basis if you are investing in India. So all that gets like very complicated very soon. So yeah, these are like the three big problems that we have identified in this whole journey. And yeah, I mean, we came across a lot of people who are very keen to invest in India, but because of these friction points, they don't end up doing that, or end up doing it through family members, or, which also does not unlock the full potential of that. So yeah, that's what we are trying to solve.
I'll give you more problems. So I think I want to learn more about the product, Ankur, but I think very valid problem, right? So I've seen this not just with me, with a lot of friends which I interact with on a day-to-day basis, because I think people who have come to at least I can talk about people who have come to the US, right? The first 5 to 6 years, people are more okay building their career and all of that. That after the next 5 to 10 years, it's more about trying to figure out different investments and all. And people often start with the stock market in the US, then maybe move to a rental income in the US. Then again, maybe the easiest is to start a restaurant franchisee, right? And once they explore some of these investments, they try to figure out ways to invest in India. And again, right, so when you start try to start investing in India and want to be part of the growth story, because you have been hearing so many stories that the real estate has doubled in the last 3 years, or stock market is growing at a much higher rate compared to the US, and so on and so forth. But it's not easy, right? So I had the same problem. If I have to open a brokerage account in India, I have to have a Indian mobile number active. And for the first 1 year, I used to wake up my dad when I have to make a trade, because it sends an OTP, and sometimes my brother, and even when I have to transfer money through UPI, if I don't have an active a number linked to my Aadhaar, I have to send the money to them, put it in. So it adds so much friction. Again, the same thing, right? Again, taxation is a big problem. Again, there is double taxation both sides. You have to file taxes again, and I think these are the problems I keep hearing in all the parties and get-togethers I go to. So I think you hit the nail on the head by trying to cover all of these. And I think one other thing which I keep hearing is, for me, I have somebody who can take care of some of the investments which I have in India, but a lot of the people, nowadays, both of the kids are in the US and their parents are in India, and even if they want to invest in real estate or rental properties and so on and so forth, there are nobody who's actually going in and managing them. So people are actually, even though they have the money, they are not wanting to kind of invest in India. So yeah, again, I kind of completely empathize with what you're saying.
Yeah, no, I mean, thanks. And yeah, I mean, these are the problems we are trying to solve. I mean, some of these are obviously, not like quick fixes or, something that you can just automate. But yeah, very real problems. And I think if we can solve for some of these, I mean, from 125 billion in remittance per year, I think we can easily like go to 150, 200 in the.
So what are the products, like investment vehicles, do you offer through this? Like, can you go into those details?
Sure. So before that, I'll just tell you a little bit about how we are building Belong, and there's this whole concept of Gift City, because that will help you understand like what we are doing. So see the problems that we spoke about, right? So one is the KYC or onboarding, then there is the actual operating of the account and transferring money and all of that, and the third, taxation, right? So you will see that some of these things are because that's how the regulations exist. It's not because no one can build a digital product for this. It's because how the regulations are in India, how the Indian regulators have laid down those guidelines, right? So I think at some point, I'm going into a bit of a history from a regulatory perspective. I think at some point in the Indian government also realized that they have over regulated and complicated this stuff, and also realized that okay, for India to grow, I mean the remittances that we get from NRIs, they are a very big part of it, a very big source of forex, and this is something that needs to be promoted. So they carved out a financial services special economic zone called Gift City in Gujarat, where they have sort of relaxed some of these regulations in order to attract more foreign capital. So that is that regulatory platform that they have built out of Gift City is essentially meant to sort of be India's gateway, so to attract foreign capital as well as help Indians to sort of invest abroad. But yeah, I think the primary focus is still to attract capital, because we are a capital starved nation. We are a developing economy, right? So that was like one of the starting points that gave us confidence that okay, now something different can be built for NRIs. If we build in the same regulatory framework that India has had, I don't think we would be able to solve a lot of these problems, because they are as per design, right? It's not like there are tech challenges. Those are regulatory issues. So now because of this Gift City, so now Gift City has its own financial regulator. Okay, so this is a small area between Gandhinagar and Ahmedabad in Gujarat. It's a special economic zones in India, like how earlier there were manufacturing SEZs. Then there was IT services SEZ. That is how Bangalore became IT city, right? Because the government initially started with some IT, SEZs in India, gave companies tax breaks to come set up shop, develop the local talent and all of that. So that's how like India has generally, developed. So now this is India's first financial services SEC. So only financial services companies are meant to set up, shop there. And again, there are incentives on the tax side, as well as the regulatory framework is sort of easier for them to operate. So to give you some examples, I mean the relevant regulatory framework for us, like for NRIs to invest in India, is the FEMA Act, the Foreign Exchange Management Act. Now, under FEMA, GIFT City is considered an offshore jurisdiction. So, what that means is that you can send money to GIFT City, you can take money back from GIFT City. It's fully repatriable, right? And it's a non-INR jurisdiction. So most of the transactions in GIFT City are USD denominated. So there are about 15 currencies that you can transact in. So it's a multi-currency regime. Obviously, dollar being the most popular one. Foreign currencies. So you can avail of services from, let's say, Indian banks or Indian startups without having to convert your money into INR.
So essentially, if you have a company in this region, that's when you have all of these
Yes.
rules apply to you, right? So it's not just regarding the investments in this place, but the company has to be registered there. Okay, makes sense.
Yeah. So for example, in GIFT City, now you have Indian banks, right? You have an HDFC, you have an SBI, ICICI. So all of them have branches in GIFT City, and they offer foreign currency bank accounts through GIFT City. So you as an NRI can open a USD account in GIFT City through a bank that you already know and trust. You can open a Euro account. Let's say, as I said, there are 15 currencies that are notified there. So you can do your banking in any of these currencies. You can make deposits in any of these currencies. So that's on the banking side. Then you have, again, same investment companies there, right? So like in India, again, you have these mutual fund companies, right? Let's say Amire Asset Management, or again your HDFCs, ICIs. So similarly, there are asset management companies based out of GIFT City which have their own, like similar to mutual funds, they have their own funds which are in turn investing in India. And you as an NRI can invest in that fund based out of GIFT City. And there again, you don't need any NRE, NRO bank account. You can do it directly from your foreign bank account. The investments are made in USD, so you don't have to convert that into INR. And whenever you have to withdraw money, right, that also can come directly to your foreign bank account. It does not sit in an Indian bank account. It's fully repatriable, and for a lot of these investments, is also tax free, right? So that double taxation thing is avoided. So there's no TDS also in many of these. There are some where there is, but for the instruments that we are working on, there is no TDS, no taxation, right? So the government came up with this new regulatory framework, which enabled some new products to be built. And that's what we are trying to leverage with the law.
Got it. No, this is awesome yet. And it also hits on all the pain points that we personally face as well, right? We want to send, we don't know where to invest. Even if we invest, we don't know like how do we get it back? When we get it back, what happens and all of that stuff. Yeah, thanks for explaining all of that. I also want to understand like where you guys are currently at, right? I know we were chatting some time back, but how are you guys trying to like expand? What countries are you guys focusing on? Can you talk more about that as well?
Yeah, sure. So yeah, just tying back to the previous conversation. So Belong is registered in GIFT City. So we have our offices there. So while we have our HQ in Bangalore, where currently, let's say, most of the tech and product team sits, but we have like a couple of offices in GIFT City. We have applied for some licenses in GIFT City. So one we have already received, which is a payment services provider license, which helps us do cross-border remittances, which helps us give a multi-currency wallet to our customers, and helps them through that. We can help them open bank accounts or deposits and all of that. So that part is done. There are a couple of other licenses that we have applied for, which are in progress on the capital market side, after which you will be able to invest via Belong in funds or in securities listed in GIFT City. So that's on the regulatory side. In terms of product, we are soon to launch our first product, which is a USD denominated fixed deposit. So that should happen in late May, early June, we should be able to do a beta, and then after that a public rollout. Initially, we are targeting the UAE region to begin with. There are broadly three big markets, like where you have a lot of Indian expats: UAE, UK, and the US. We are starting with UAE. It's a highly sort of concentrated market. So there are about 4.5 million NRIs in UAE, and that's basically just like three cities: Abu Dhabi, Dubai, Sharjah. Our initial TG is more of salaried, sort of white collar NRI. So that's mostly maybe 1 million or so in UAE. Again, across two cities, so easier to sort of serve them. Also, from a time zone perspective, closer to India, where almost all our team is. So from an operations support perspective, also much easier. So that's some of the reasons why we have picked UAE as our starting market, and then after UAE, then there's UK and US that we are going to look at. And yeah, quite excited about our first product launch, which is imminent. We have been working on it for almost 8-9 months now, integrating with the banking partners, getting our licenses in place. So yeah, now everything is almost there.
So I have another question on the regulation, Ankur. So as I understand the regulation in India, it's easy to invest. Right? Like if you know the investment vehicle, it's easy to put as much money you want from the US to India. But taking money out is the difficult part. What I heard, right? A lot of people who actually initially plan to move to India do a lot of investments, but typically then stay back in the US. It's very hard to get money back. But does that regulation change in the gift city, or is it?
Yep.
Okay.
Yeah, definitely. So yeah, very rightly said. Sending money is easy. Taking money out is very difficult. And again, to give you some background, it's because Indian currency is not freely convertible. Like we have capital controls, right? But again, if you're conducting your investments via GIFT City, in GIFT City based products, so since that is considered an offshore jurisdiction under FEMA, so it's like you're not sending money to India, right?
It's still a foreign country or
foreign jurisdiction, so you can easily send money, take it back. All of that can be done at the click of a button. So that's how it works with the product that we are building. So you can make a fixed deposit in USD through your foreign bank account. You don't even need to open a new bank account here, either in GIFT City or in India. So you can bring your US bank account, you can bring your UAE bank account, just transfer money from there, make that deposit. Whenever you want to withdraw it, just click a button, it goes back to your bank account.
Awesome, yeah. This is great. I'm also very excited. Hopefully, you guys will launch. As soon as you guys launch in USD, please let us know. We will be happy to try out, be the guinea pigs for sure for the first time. I also want to understand more about the challenges that you guys are facing, right? I know this is probably one of the first time even Indian government is doing this. You guys are probably learning through a lot of things as you go through it. Can you talk through some of the challenges that you guys are facing?
Yeah. So especially when you're building in fintech, regulation is one of the main things that you have to be cognizant of, and build in accordance to that. And fintech is one place, especially in India, where move fast and break things does not apply. You have to be really thoughtful about what you are building, because you're dealing with people's money. And you have to really think long term. So as I said, we started Belong in Feb of 2024, right? So it's been more than a year. Our product is still, not out. And this is not unusual. This is a typical product cycle in fintech in India, especially if you are building on your own license, or if you're partnering with a bank and all that. So all that takes time, and obviously that is one of the challenging things, because when you are doing a startup, right, speed is one of the edges that you have. But when it comes to fintech, that's something that does not usually work like that. So I think the top challenges have been, just getting these things in place. And the product is very simple, right? Our first product, it's a fixed deposit. Everyone understands how that works, but still, like, the amount of things that need to fall in place, from your, regulatory approvals to your banking partnership, and then the bank integration. So just to give you some idea of, the complexity. So the fixed deposit is offered by a bank eventually, right? They are the ones who are licensed to offer a deposit product where the customer can earn interest. In order to build a fully digital journey for this, right? Like, our app should be able to talk to the core banking system of the bank, right? And just imagine, for a bank to allow a new fintech to integrate to their core banking systems, right? And modify the balances, modify deposits and all. I mean, that's a big deal, right? So it has to go
And
through
I've
a
also
lot
heard
of.
some banks still use mainframes.
Yeah, I mean, yeah. And I mean, the core banking system is obviously something that, they don't upgrade so often, right? Like, because that's like the nerve center of everything, and the risk is just too high, right? So there are a lot of approvals that you have to go through, a lot of, so there's infosec requirements, data privacy and all of that. So a lot of hoops. I mean, the building, the feature is actually, like, just the tip of the iceberg in this case. It's all the stuff that goes behind it. And similarly with, regulators, although with Gift City, given that it's a new jurisdiction, it has a separate regulator. So they have been, like, very nimble. Like, I think we got our licenses, the first license done in, like, end to end, like, 6 months, which I think is a pretty good time frame, anywhere across the world, not just in India. So yeah, I mean, they have been quite accessible, quite fast. But yeah, I mean, these things just take time.
Makes sense.
I think that has been the biggest challenge.
Got it. I don't think any podcast would end without talking about AI here, with the where the world is going. So can you also talk about how you guys are probably leveraging AI, um, be it investing, be it customer features, or like pace in itself? Like how is it being useful for you guys to like grow at a certain
Yeah,
pace?
yeah. So So yeah, I mean, mostly it's internal. The engineering team has been using Cursor, but we have also been using it for, some consumer-facing stuff. So to give you an example, we wanted to create a repository of all the fixed deposit interest rates that are available to NRIs across banks, across tenure. So there are some 3-4 kind of fixed deposits that NRIs can make, either through their NRE and NRO accounts. These fixed deposits are denominated in the rupee currency, or they can make a foreign currency deposit also available with Indian banks. So this can be made in, let's say, USD. And then the other thing is what we are now building, which is a Gift City based fixed deposit. So we wanted to collate all this information. Generally, anyone would have to go through, like, multiple bank websites, which are anyway not very easy to navigate, to see, okay, what is the interest rate being offered by this bank, right? So we wanted to sort of put all of that together in a interest rate explorer or something like that on one page. And I think I gave it to someone in my founder's office who's a non engineer, to execute this. And yeah, I think he took a couple of days to iterate on it, but used chat gpt to sort of scrape a lot of this data and, like, put together in, like, one file, which could then be uploaded on our website and displayed. So yeah, I mean, very extensively being used. I'm using it for some of the internal writing that I have to do. Also, some of the posts, I take help in writing. So yeah, pretty much, like, we have a 25 member team. I think 80-90% of them are using these tools in some way or the other.
I'm surprised 10% are not using it, but
Yeah, I've heard that a lot of startups are doing that. They're the first day they're actually installing all the AI tools and asking them to, okay, you can start building right away. So,
awesome here. No, thanks for talking about belong. I have like one simple thing here. I'm very intrigued by your logo, like especially the hearts.
What is it? Yeah. So it's, yeah, you can see it as a, so when, I mean, our designers came to us with the logo, so they just showed us the B part, right? This whole thing was not that, because that's the logo. So they said, you can interpret it as a heart, you can interpret it as like a leaf thing. So yeah, I mean, both those interpretations are true. We wanted something which didn't have any sharp edges. Like we wanted like a soft feeling, because that's what belong, is meant to evoke.
So you belong where you are, say invest in
Yeah.
your home country kind of thing.
Yeah. So sort of, yeah, I mean, this is one of the common themes that we came across, when we are speaking to NRIs. Like, after a couple of years, there's almost a sense of, okay, I don't belong in India. I don't belong here. Like, where do I belong? And so I was just trying to help them with that. That, okay, at least here you will feel like, because this is also going to be the first, app which is only built for NRIs, like Indian expats, right? So at least you can feel like, okay, we understand, what is going on with your lives, across time zones, across countries. So this is one place where you will feel that, okay, this is where I belong. So that's what we were going for.
I've also seen, I've also loved some of the videos that you guys took from your customers talking about their journey, their things on what they do,
Yes.
like in their daily life and stuff. Yeah.
Yeah, thanks. No, I mean that part is handled by Savitri. She's heading the entire marketing and the customer experience bit. So yeah, all credit to her.
Awesome here. So beyond the company, right? I want to understand more about you as well. Like we all aspire to be entrepreneurs down the line, and we want to learn from each and every entrepreneur that we can talk to, right? Can you talk more about your journey? I'm sure there is crazy ups, crazy downs. I'm sure you might be from time to time, you're like, dude, why am I doing this? Or, dude, I'm doing this. So, can you talk about yourself, like ups and downs? Like, how did you feel throughout your journey?
No, definitely. And I think with this podcast, you guys are already, entrepreneurs in a way. But yeah, happy to share my journey. So the first time, I mean, this is what I believe. The first time you do it because you don't know how hard it's going to be. I think if the first time anyone, like, if I actually knew that this is how hard it's going to be, I might not have even, started up initially. So anyway, and then with the first startup, you make a bunch of mistakes, and then what happens is that now that you have made these mistakes, you have your learnings, then you're sort of itching to do it the second time, because okay, what are the things to avoid, how you can do it better. So I think that's how the thought process was for me. Although like just after Goalwise, I was feeling pretty burnt out, and just after Goalwise, like, boss, I'm never going to do a startup again. Yeah. But like after a year or so, when you're not feeling as burnt out, then you can reflect back on it and okay, now I know what not to do. Now I know how to do it better. So then eventually again start feeling the itch to do that. And again, I was grateful that my previous co-founders, all of us were still at Neo after the acquisition. And almost everyone was like, yeah, nahi, let's try it, once again. Now we know how to do it better. So this time it will be, much bigger, more successful, whatever. So almost everyone was sort of, had that thought. So it sort of became easier than it before with. So yeah, I mean, that's how it came about.
Makes sense. I also want to talk about your fundraising and also your investing journey, right? If I'm not wrong, you're also an investor in other companies and stuff. So, can you talk more
Yeah.
about those as well?
Yeah. So I mean, with Goalwise, so I'll start with the Goalwise phase. So with Goalwise, we just raised once, like a seed round of about 1 million in 2015. That was not from any institutional investor. It was like an angel round. And I mean, that was all the money we raised till acquisition. Uh, then post acquisition, I mean, I got some liquidity, at developed some network. So I started getting some inbound deals and all, and I started investing a little bit here and there. But yeah, that gave me sort of more insight into other startups, gave me a good network of startup founders and all of that. After a couple of years at Neo post acquisition, I left, and actually I did a brief stint, slightly over a year, at an early stage VC. And I think that really gave me that entire other side of the table view, working with an early stage VC. So, Must have looked through like 100 plus deals, did a few, but interacted with a lot of founders during that entire process. Also saw how internally VCs think about funding decisions, what they look for, and all of that. So I think that really helped. When I was starting up the second time with Belong, also with that entire experience of having done a startup, like to an exit, to being an angel investor, to being a professional investor at a VC. So I think everything sort of came together when we were doing Belong. So and it was really helpful to have that entire perspective.
If you can probably share like a couple of things that you learned being part of a VC.
Yeah. So I think one of the biggest things that I learned was just like a top-down market analysis, like identifying the trends, identifying what sort of can be a valuable company. Sort of when I was running a company, or when I was just an operator, like a founder, like how you sort of distinguish between, you learn to distinguish between, let's say, what's a feature versus what's a product, right? As a VC, I learned to differentiate between what's a product versus what's a business, what's a product versus what's a company, right? And now looking back, I can say that okay, Goalwise was a product, not a company in that sense, right? So I think that was one of the biggest learnings of like by being a VC. The other was also just to understand the VC math, right? Like how it works, the fundraising math. So just to give you an example, right? So we were at Belong, like we were trying to raise like a seed round of 3 to 5 million, right? Now, if you're trying to do that, the first thing you need to lock in is a lead investor who can lead the round, right? Lead investor is generally the one who does the main DD of the company, sets the valuation terms and all of that. And then there are some investors who will just follow the lead. So the lead will set the terms and this one will just follow after the lead has given a term sheet and all of that. So this is generally how rounds are structured. And so if you want to, let's say, do a 5 million round, right? You need a lead will generally be a lead if they're doing more than 50% of the round, right? So you need someone who can lead the round with at least a 3 million check, right? So that by definition narrows down the number of VCs who can do that at an early stage, right? Just idea on paper, just the co-founding team in place, right? So that, okay, these are the 10 VCs who can probably do this. So you don't spend time talking to, the other 100 VC who don't write checks of that size at an early stage, right? So just understanding this math, helped in the journey. So we knew like exactly who to approach, what to avoid, and all of that. And also we knew that okay, what would they look for. So again, a seed round is basically based on two things: how good the team is, and how big the market is, or what's the problem you're trying to solve, right? So once we had these two things logged in, then our fundraise was very easy, right? Similarly, going forward, now if you're trying to raise your series A, now series A depends on whether you have product market fit or not, right? So now we know that what to look for. So let's say, for example, if we have let's say 10,000 NRIs on our product, so we know that that's a good enough evidence for product market fit, right? So once we have that, then our series A also will be pretty easy to raise, right? So you have to know that okay, what is it that is required at that stage, right? And you work towards that and then raise the round, and not like the other way around that I would have also done in my first time founder journey, that you start raising the round when you need the money, then you let people tell you what they need, then you start looking at that and all of that, and then just becomes a circular process, right? So just having that clarity like really helped me the second time around.
So just to reiterate, right? So what was the criteria for seed funding? Was it the market, and you mentioned none of it?
The team, right? So
Okay.
basically you are looking at who are the co-founders.
Okay, people are investing in the team and the market.
And
Okay.
the market, right? that, okay, this team is building in this market. That's generally a good enough, like if they are convinced about both these pieces, that's generally, a good enough place for them to write a seed check, right? Seed, pre-seed, whatever you want to call it, the first check. I mean, that's mostly on those two things. And that is how I learned this, is by being a VC myself. Like, this is what we used to look for. When a team used to come to us, we were generally the first check in most of the. So this is what we used to. But because obviously at that time you will not have a product.
I want to flip the question, right? Like, what are the common mistakes that you typically see?
I think so we're talking about fundraising.
Startups, like let's say startup came to you,
Startup.
came to a VC. Like, what are the typical mistakes that you see in a startup?
I think, I mean, similar mistakes that I myself have made as a first time founder. So, focusing too much on, product and its features rather than like the big picture. Again, having that whole GTM or the distribution angle thought through. I think that is like the number one mistake. Then, specifically towards fundraising, not having clarity on the like how you're going to construct the round, like what is the size of the round that you want to be needed from, and all of that, like that clarity. A lot of times, especially first time founders, they just go into the market that, okay, now I have this idea, let me start pitching, and they let the market sort of dictate that, okay, is this like a 1 million seed round idea, or is this a 5 million seed round idea? Like, they don't have that kind of clarity. But the more clarity you have, that, okay, what is it that you want out of this, the easier and the better it is. Like, I've seen these cases where, because I mean, see, in news you always hear of bigger rounds, right? You don't hear of the smaller rounds. So founders come in with this idea that, okay, now I want to raise like 3 million as seed round, right? And they have a decent idea. They are a good team. So they start pitching to VCs, and VCs are like, "Nahi yaar, I don't think this requires 3 million to take from seed to series A." Right? That's what that money is for. From seed to get you to series A. Right? So they are like, okay, we like you, we like the idea, but I don't think this is like you need 3 million to prove this from seed logo. These days will be 1 million is good enough. And at that point, then, they will not take that deal. And after going through it with like some 2-3 months, going through all the BCs they could have pitched to and all of that, no one has offered them with that preparation. And by the time they come back, then that 1 million is also off the table. And all that. So, having that clarity that how much money do you need actually, right, to from stage 1 to stage 2. That's just see proceed. Then maybe obviously add some buffer as well. And then, following from there, that usually will lead to like much more success than just going out there and seeing what the market has to offer you.
Okay. Awesome here. No, love the conversation. I just want to end the podcast with like some few fun questions, right? I know you have been in like fintech world for quite some time. So if there is one fintech product that you loved, like this is the best product that I've used, what would that be?
That I've used, I can I say Goalwise?
Sure.
I'll give you another hat. It's a product that I've used and loved. I think Neo, I think it was, although I ended up working there, but yeah, very solid product. So they basically give a zero forex markup travel card, right? So whenever you are traveling abroad, so that's the card you can use so to avoid any forex fees, right? So I think that was a beautiful product. It just worked, right? Like, you get a card, you swipe it. Like, I've traveled to the countries in the last 3-4 years, and it has worked everywhere seamlessly. The product that I've used, I think that's what. But
Nice.
there are fintechs that I admire. Because fintech products that you use tend to be localized. Like, I can't use a Robinhood, for example. But yeah, I mean, there are fintech product companies that I admire, like Bank, Revolut, definitely.
Makes sense. If there is any books that you could recommend, especially for entrepreneurs, anything top of mind?
Yeah. I found this book called Working Backwards. So it's by a couple of ex Amazon executives, and they basically lay down the entire operating system of Amazon. So I think that's one book that I recommend everyone. I have found it to be very useful for me. Like when I read it, and like more lot of the concepts I still apply in my work.
Are there any podcasts that you would recommend?
Yeah, everything product. That's what podcast.
Okay.
Everyone should listen to. I think for podcasts, I don't. I have a bunch that I follow, but I found myself gravitating towards the founder interviews, where you can get like an unfiltered view of what was going on. Because I think, see, after a point, everyone forgets, things start becoming much more saner, or less raw in your head when you start narrating. So I really like, how was it when they were just starting out, right? Like they may be big companies now, but like their earlier interviews and also those things I left started finding very useful, because then you get to see that entire uncertainty, chaos, like it happens with everyone, and they were not exceptions. Everyone goes through that same chaos. So those kind of raw, unfiltered, non-varnished, that happens over time. I think those have been finding very useful, like actual stories from the trenches.
Makes sense. Maybe a last question on that, or an extension to that. Like any specific founders or entrepreneurs that you can consistently follow?
Consistently, again, I've been following Newbank and Revolut a lot. So any interview of theirs, I do make a point. Or nowadays, like even their execs, like if their chief product officer or their CMO, like has given an interview. So yeah, these companies that I really look up. So if anything that comes out of their team.
Awesome, Ankush. That's all I have. Again, thank you so much for taking time. I feel like I learned a lot.
No, I mean, this was a lot of fun.
We would love to be the guinea pigs once you guys launch your product here. So please let us know. We would love to like put some money there.
That's very kind of you. We'll definitely reach out.
Yeah, and this has been a problem for so many years for me now. Happy to hear that something is being at least a product is being built around it.
Yep.
Thanks, Ankur. Yeah.
Awesome, Ankur. Thank you so much.